Okay, good morning, everybody. It's 9:30. It's time to start the meeting. So, Madam Clerk, roll call, please.
Commissioner Colleen.
Here.
Commissioner Dobb has requested an excuse. Commissioner Clark Coleman.
Here.
Commissioner Kniezek.
Here.
Chair Basham.
Here.
Fellow quorum present.
Thank you. Next item.
B, Chair's remarks.
I have none at this time. Next item.
C, approval of the February 23rd, 2022 meeting minutes.
I'll move their approval, Mr. Chair.
Okay, it's been moved for approval. Can I get support?
Support.
Okay, moved and supported. Any discussion? All those in favor?
Aye.
Aye.
Aye. Ayes have it. Next item.
D, unfinished business. There is none listed.
Okay, appreciate that. And the next item, Madam Clerk.
Item 1, under new business, a discussion with the Wayne County Treasurer's Office on the status of external audit.
Okay, I appreciate that. So before we get into that, I'd like to introduce our Auditor General, her staff, and her invitees. So welcome, Ms. Cora, and please introduce your staff and guests.
Marcy Cora, Auditor General. I also have Mark Abel and Huey Newsome here. Can introduce themselves.
Yes, this is Huey Newsome, Chief Financial Officer for Wayne County. Thank you.
Mark Abel, Chief Fiscal Advisor for Wayne County Commission.
Welcome. So
I'm not sure if we have any representatives from the Treasurer's Office on.
is there anybody from the Treasurer's Office on? Anybody from the Treasurer's Office here? Well, let me just say this. I was hoping this would be a friendly meeting. I would hope that we would resolve some things. We do have subpoena powers if it gets to that point, but quite frankly, there are a lot of issues, and maybe we can get started and let's talk about the external audit. Ms. Cora, please.
Okay. This is a little introductory. In accordance with the Wayne County Home Rule Charter as amended by Section 3.119 and the applicable sections of the Code of Ordinances, our office is responsible for engaging the external auditor to complete the county's external audit. We're responsible for managing the contract. And as part of our audit process, we meet weekly, starting probably around in January. Mark Abel attends meetings, myself, along with representatives from all of the departments that are have a say in the audit and with management and budget. During the audit process, we go over what documents are required by the various entities to be provided so that the external auditors can review the documents. Starting back in January, there was several items that to this day still have not been provided by the Treasurer's Office in time so that the external auditors can review them. So on March 10th, we're informed by Plant Moran that there's a possibility of, as required by the standard, if there's a possibility of change in the scope or timing of the audit, they needed to report to the chair of the Committee on Audit as the standards require. So on that date, Plant Moran, Dave Helsack, the partner in charge of the audit, contacted Chair Basham to indicate to him that there's a possibility that the county might not meet the March 31st deadline for submission of the audit. At that time, the chair of the committee had requested that we have the Treasurer's Office come to the next audit committee, which is this meeting, to give us an update on the status of what is needed to get the audit completed and then what action can be done so we don't have these problems in the future.
And to that point, let me just say that I sent an email and a written letter to the Treasurer's Office. Please proceed.
And maybe Huey can go a little bit into the implications of not completing the audit by March 31st. I know we've been working with him. He's been great trying to get this resolved. So give us a little update on that.
Yes, thank you. Thank you, Ms. Cora. So I also have my deputy here, Deputy Yogesh Kasani as well, who can also help answer questions. Please excuse me, I did not introduce him earlier. So as Ms. Cora did state, we were made aware of the risk of, and eventually the announcement that we were not going to make the March 31st date. And so me, along with my team, have been working to assess what the risks are to the county in regards to not making the filing deadline. And so what I like to do is just kind of bucket it in 3 areas. I think number one, by state treasurer's office, by law, we have 180 days, which really is right at the end of March, to file the audit. And if we fail to do that, there are potential implications, notwithstanding our revenue sharing that we get from the state. I think in the last budget, we had $52, $53 million of revenue sharing revenue from the state, from obviously sales tax. And so we do, and again, we're not going to just sit here and not manage these risks. We will be, conversing with the treasurer's office later this week to share this information and see if there's a way for us to request an extension. But again, that's a risk. The second area is with bond covenants, and we've reviewed the bond covenants, or at least a majority, our largest bond covenants out there. And those bond covenants have clauses in there in which we do have to file audited financial statements, some within 6 months, some within 7 months, and some within 8 months. And so we will be filing a notice of a late filing with those. We do not expect, based on what our discussions with bond counsel at this point, we do not expect to have any defaults, but it is something that we'll have to file, and that will be noted in our, in terms of our disclosures. And thirdly, which I think is, my, one of my bigger concerns, is with the rating agencies. And I think everyone is familiar with how rating agencies assess the county's fiscal risks in financial solvency. And so one thing that we are concerned about, there is no hard and fast rule in terms of, hey, if you file financial statements late, then we're going to bring you down a notch or 2 or 3. However, it is not a good signal to rating agencies that we cannot, for whatever reason, file our audits on, file our audited financial statements on time. And so again, this is something that my team will be working, towards the end of this week into next week to alert the rating agencies and be proactive in that. But again, this is a signal in that I have to state this for the record. We've worked very hard. This administration, along with commission, have worked very hard since the since the recovery to get those ratings increased, and there's a lot of good work has been done. And one of the things that the rating agencies continue to comment on when in any upgrade that we've received is the fact that we are demonstrating good governance over our financial records and over our financial systems and reporting. And so this is a signal that could have implications to us. Again, we don't know. We're trying to manage that, but we do not know. And I'm not comfortable that we're out of the woods when it comes to how the rating agencies will perceive this.
And if I could add too, for the last several weeks, myself, Mark Apple, Huey, Yogesh, and Plant Moran have been meeting almost daily, I would think, trying to get to a point where, Plant Moran can issue the audit. Everybody's doing everything they can, stepping up, trying to get this completed. But it's to the point now where I don't believe it. I'm not speaking for the auditors, but making the March 31st deadline, I think it's not going to happen. But we have to make sure that it gets completed as soon after March 31st as we can. I just want to commend everybody for the work they've done so far, trying to get it to the point where we are now.
Can I, for those that don't know, and this is very interesting, all departments seem to push back when you get audited, but I've never seen the amount of pushback that I'm seeing from the treasurer's office. When did we start to get this information, and what's the holdup? From Huey or Ms. Cora, either one.
I'm gonna, Commissioner Bashan, if I may, I'm gonna concede and let Yogesh talk.
Okay.
To that.
Yogesh Kasani, Deputy Chief Financial Officer. that's normal during our audit course, which is
Mhm.
as soon as September ends, we send them a list around in October and November, and these are some of the schedules, what we call it a PBC, provided by client or prepared by client. And that includes a lot of taxes, delinquent taxes, cash reconciliation, and so forth, mainly related to a treasurer's office, all the schedules. And we have a deadline. We give it to the plant moran and say, this is what we are going to turn it to on this particular deadline. So then they can finish, their audit. And there's a constant every Thursday, we have a status meeting and, and say, okay, we're going to get it done tomorrow. We're going to get it done tomorrow or next week. So that's a continuously just, going delayed and postponed. And some of these things we do get it, it's just not clear. Those are not accurate.
Mhm.
And so it does go back to them. And that's where we are going back and forth at this point.
Mhm.
Auditors are not comfortable, certain things, what we are getting from them. So that's where we are right now.
Very interesting
Now-
stuff. Go ahead, Ms. Cora.
And I didn't know if Mark Abel wanted to add anything, just so I know he's been attending our weekly, sometimes twice a week meetings.
Yeah, Mark.
Thank you, Ms. Cora. I think that Huey and Yogesh have defined it very, very well. I mean, the audit process it's what they're trying to do is validate our numbers. And that's what an audit really is. They review our systems, check our internal controls, our processes, our procedures, and they look at the numbers on our financial statements, and they use validation techniques. They're looking for external sources to validate numbers like bank reconciliations, make sure that what we say our bank balances is reconciled to what the bank says our balances is. And so the PBC schedules that Yogesh is talking about is really just us providing work papers to them to show that, to validate the ending numbers. And the reason for the weekly meetings is, sometimes those schedules are presented early, sometimes they're presented a little late, and it assists Plant and Moran. It gives them the ability to complete their audit on a timely basis. They can manage their own workloads and work schedule to accommodate it. And the data that has been needed from the treasurer's office has been late and has lately become very problematic. So not issuing the financial statements on a timely basis, the appearance of it is that there's issues and there's problems. So I think that it's something that is very serious and needs to be addressed.
If I could add too, one of the findings from the fiscal year 2020 audit related to the distribution of the undistributed tax is that the treasurer maintains and being able to reconcile them to the general ledger. So that was an issue back in 2020, and it appears it's still part of the issue this year. And that's part of the problem why the documentation hasn't been provided.
So,
And I believe also too, many of these items that the auditors are waiting for, they were due back, and Yogesh, you can correct me if I'm wrong, around the end of January, mid-January, these items were due to the auditors?
Yes, yes, Marcy, yes. There was a due around January, yes. And if I may add, Chair Basin, what in our auditing term, and I know we all are auditors here sitting, cash is a king. Auditor wants to make sure cash is good, but if we are just moving around cash and cash is fluid, it's very difficult to audit the books.
yeah, and we know from the previous treasurer that we had to have, 30, 35 mil so that we could request bonds at higher rating. But he was sitting on 232 additional mills. And so I hope this treasurer's not going down the same direction, but the point is we need to all work together. I use the term row together, but
Chair Basham, if I might interject, it's
Yeah.
really not just the fund balance that may be in those funds. The treasurer manages the entire pooled cash accounts of the county. And those balances can sometimes be as high as $500 million. And not all of it represents fund balance. Some of it represents liabilities to other, governmental units, And it's held, and also liabilities to other funds. So Wayne County has a pooled cash account, and it varies in balances. Sometimes I believe it gets as low as 300 million. Sometimes it gets as high as 500 million or more. But it's a rather large balance, and it's important and imperative that those accounts be reconciled on a timely basis. And if adjustments are needed to the accounts, that they be recorded properly. And one of the things that Plant Moran does as part of the audit is they do what's called a flux analysis. And if there's journal entries that are resulting as because bank accounts are not reconciled timely, well, it affects that analysis. And so it's problematic to complete the audit.
Okay, and is there somebody from Plant Moran here? Just yes or
No, we had requested Plant Moran not attend the meeting.
Oh, okay. Is there any commissioners that would like to weigh in on this? Because the questions that we had to ask the treasurer's office, the treasurer or any of his staff were not at our meeting. So, but if there are any comments or questions from like commissioners, I'm sure Commissioner Clean has a question or comment.
Yes, Mr. Chair. That's why I put the hand up.
Well, I didn't see it, honestly.
There, well, here I am.
Oh,
If this goes on for a little while, let's say all the paperwork turned up today. How long would it take Plant Moran to complete the audit?
That would be a Plant Moran question, but they'd have to be satisfied that the responses satisfy the questions they have. Then once that is completed, then it goes through a couple layers of partner reviews. So it's not something that can happen overnight.
That's what I'm getting at. Are we talking a 2-month window?
I don't think a 2-month window, no.
But maybe a month.
Maybe a month, maybe less than that.
Maybe less. What I'm thinking about here is this being delayed. How is this going to affect our budgeting process for next year? Is it going to slow that down?
I can answer that question, Mr.
Go ahead.
Chair. No, it won't. It will not.
Okay.
It will not. Those are two separate matters. Actually, there's always a comparison of budget to actual. That won't be affected.
Well, I didn't know if there was anything else in the audit that people putting together the budget needed to see. So
no, it won't affect our budget. This is really just basically our starting point on what our fund balances are and what our assets and liabilities are. It's really the important thing we get out of the audit, as well as whether we have a surplus or deficit in the revenue and expense side.
I was just concerned we'd have some sort of a rubber band effect here, and I'm glad we don't. Thank you, Mr. Chair.
okay, thank you, Commissioner Clean. Does Commissioner Coleman or Commissioner Knezek have a comment or question?
Well, I would like to say that I don't know how we can continue this meeting if we if we don't have the information, or if there's no one here from the treasurer's office.
Well, we have another item, but also again, I did send a letter in writing, and I CC'd the county exec and commission chair, and so this issue will not go away, but it could hurt our bond rating, among other things, if we don't deal with it like sooner than later. So it's number one priority for certainly our office, but I appreciate your comments. Commissioner Knezek, you got any comments or questions?
Nothing from my seat, Commissioner. Thank you.
Thank you very much. And Mr. Newsom, you have any comments or questions?
No, I don't have any comments, but I will any questions. But a couple of things I will say. I appreciate you all support in getting this done, and again, I have to commend Ms. Cora and Mr. Abbo in helping us get this done. And you're right. This is top priority for the county executive, as well as my office and my team, which is exemplified by the fact that we're here today. So we will continue to work with Ms. Cora and Mr. Abbo to keep you all up to speed. But really do appreciate your help in raising the sense of urgency and providing transparency here.
Well, never thought I'd ever be talking about this, but we do have subpoena power. And if that's, it's a shame that we have to result to something like that. So hopefully we can get this done sooner than later. But anyway, on that item, is there anything else from anybody?
And I'd just like to add too, we'd like to thank Mr. Newsom, Mr. Gasani for all the help they've done with Mark, Mr. Abel, and myself trying to get it to the point where we are today. And as per the standards required, the auditor to notify the audit committee chair by him having this meeting too. He has notified the rest of the members of the committee on audit.
Yes. Yep. So I guess, is it appropriate to get a motion to table this item till for the day?
If that's the appropriate motion, Mr. Chair, I'll move to pass for the day.
Okay. All
Not
right.
table, but pass.
Pass for the day.
Support.
Okay. And it's been moved and supported. All those in favor?
Aye.
All those opposed? Ayes have it. Next item, Madam Clerk.
Item 2, communication from Marcelo Cora, Wayne County Legislative Auditor General, forwarding the copy of the Office of Legislative Auditor General's Financial Assessment Limited Review Report, the Wayne County Employees Retirement System Defined Benefit Plan, audited financial statement for the fiscal year ended September 30, 2021 to September 30, 2020.
If we could take,
Cora.
I'm sorry, if we could take item 2 and 3 together. They're both retirement system financial statement analysis.
Okay, that sounds like a deal. Let's do 2 and 3 together.
Okay, if staff could introduce themselves, then we'll have our guests on the retirement system introduce themselves.
Mike Sosnowski, Audit Manager.
Good morning, I'm Mindy Hayner, Supervisory Auditor.
Welcome.
Good morning, Gerard Grisco, Deputy Director for the Wayne County Employees Retirement System.
Welcome again.
Thank you.
Good morning, Todd Pickett, Department Executive Retirement System. And I also want to thank Chairman Basham and Ms. Cora for postponing our original meeting. So several of us could attend the funeral of the father of one of our retirement commissioners. So thank you both.
Sorry for your loss, but thank you. Thank you.
And if I could be allowed to share the screen,
Sure.
we'll do the defined benefit plan first.
Okay.
Yeah, I'm having difficulties here.
Let's
Start with the defined contribution plan because that's, well, let's say it's failing to start. Okay, maybe Mindy, if you could start your presentation. In the meantime, I'll try and get it on the screen.
Sure. We performed a limited assessment financial review on the audited financial statements of the Wickers Defined Benefit Plan, including supplementary information for the fiscal years ended September 30, 2021 and 2020. The auditor's report on the financial statements resulted in an unmodified opinion, which is referred to as a clean opinion. In our assessment on pages 3 through 5, just some highlights. The plan's total assets as of September 30, 2021 were 1.15 billion, the majority of which represents cash and investments. Total assets increased by 190.1 million or 19.7% from the prior year, due primarily to the net appreciation of investments. The last 2 years had a favorable overall rate of return on investments of 26.74% and 3.38% for the fiscal years ended 2021 and 2020 respectively. Total additions increased by approximately 217.5 million from 105.2 million in the prior year to 322.8 million for the fiscal year ended 2021. This is due primarily to the net appreciation in the fair value of investments resulting from improved financial markets, coupled with a $3 million decrease in contributions over the prior year. The decrease in contributions.
To that point, if I could stop you, why was there
Sure.
a decrease 3 million? Does anybody?
Yep, I'm getting there.
Okay, I'm sorry. I jumped the
That's
gun.
okay. So the decrease in the $3 million decrease in contributions is related to, number one, a decrease in the actuarially determined required employer contributions. And number two, the decreased member contributions resulting from a decrease in wages. Does that make sense?
Yes.
Okay. Even so, the county made contributions of 5.1 million above the required contribution amount. Total deductions from net position were consistent with the last 2 years, and both fiscal years included a stipend benefit paid to pre-Medicare eligible retirees. The plan's notes to the financial statements for both fiscal years ended 2021 and 2020 included discussion around the pandemic and its effect on global market activity and the resulting volatility in the financial markets. Because the values of the plan's investments have fluctuated and will continue to fluctuate in response to the changing market conditions, the amount of losses recognized in future periods, if any, cannot be determined. The value of the plan's investments has a direct impact on the plan's funded status. And as a result, any potential declines in the market value, as well as possible changes to the actuarial assumptions used in determining the pension liability, may require WICKers to make greater cash contributions to the plan. As of the date of issuance of the statements, the plan's operations have not been significantly impacted, but WICKers management continues to monitor the situation. In conclusion, nothing came to our attention that caused us to believe the audited statements of the plan and the other supplementary information are not presented in conformity with GAAP. It is our recommendation that our report on the defined benefit plan statements for the years ended September 30, 2021 and 2020 be forwarded to the commission to receive and file.
And I sort of have a question on that, if I may. Do you think that COVID-19 pandemic had an effect on the defined benefit plan for 2022? Who would be appropriate to give me that answer?
I'll have to refer to WICKers on that.
Okay. Could somebody from WICKers respond on that one?
Really, the COVID really hasn't had a detrimental effect. At first, in 2020, there was a decrease, but then we just had the stellar year of 2021 with over 26% returns. This year, there's other factors coming in place with like Russia and things like that, that I think it may have more effect on the markets than COVID. Right now, personally, we don't have any investments in Russia. So that side of it, we're not affected by Russia, but the stock market as a whole could affect other things. Right now, the market has been kind of flat for this year, a little down, been volatile up and down, but right now we're kind of flat with our return for this fiscal year.
Oh, okay. Well, that certainly helps, but anything else, Ms. Cora?
No, we'll go on to the defined contribution.
Okay.
Let me get that one.
Chair?
Here.
Mr. Chair,
Commissioner Kleen.
we taking questions or are we waiting until both?
Whatever works for us.
All right, well, as long as we're stopped. What is where are we at with our percentage for how well funded the defined benefit plan is?
We don't have any new numbers since the last valuation. So the numbers we're looking at is from 2020. So for 2020, the county was like 65% funded.
65. Okay, last I heard, I thought it was 62. And just historically, just before the whole collapse in 2008 of our revenue and everything, what percent were we funded then? Was it this last 14-year period that really put us behind? Where were we at before the great decrease in our revenues?
Actually, the reports that I have in front of me, I do not go back to 2011 is the farthest I go back right now.
Yeah.
I'd have to get back with you on that.
But was that event, was that what caused us to really fall off in terms of our annual required contribution?
It was a combination of market and the opening of some of like the defined benefit plans and changing the multipliers and things like that. So it's kind of a combination of market and, if you want to call it, contractual changes.
Yeah.
Mr. Chairman, I could answer that question.
Go ahead.
Thank you. Back around 09, 010, we were down in the 40s. I believe it was 42% funded.
Yeah, that's what I remember. Yeah.
Yeah, we recovered dramatically. Right now, though, one of the important aspects of it is, we're amortizing the deficiency that we have in our funding. As of the end of last year, there was 14 years remaining. And what happens is any gains or losses that we have get amortized over the remaining period. So the real key is that in 14 years, if we continue to pay the annual required contribution, we will be 100% funded. And the annual required contribution is somewhere in the range of, between $50 and $55 million.
Yeah, it is.
So, that's really good news. We dramatic improvement in the level of funding. We are well beyond a point of really coming back in recovery. So I was very pleased when I saw the numbers, particularly last year when we went through the budget process, where we really stood with our retirement system.
In reality, is 100% the goal?
Well, I think that 100%.
Or what number are we looking at that we want to hit? 80?
Well, if you think about it, what happens on the annual required contribution is we pay current service liability. So whatever the current liability is, plus amortization of the past service liability or unfunded liability. And that number is $52 million. If we are 100% funded, we can utilize, those resources for other things. So from that perspective, now we continue to pay the $52+ million as long as every year the period of amortization drops by 1 year. If we ever wanted to really extend it and take advantage of the fact that we're very well funded, like if we get to 80%, then we can start the amortization again at 20 years, and then our annual required contribution will just drop. It's like taking your mortgage from a 5-year amortization to a 30-year amortization. Your mortgage payment drops. So we can take advantage of that, but it depends on what the focus is and what the objectives are at that point in time. But it gives us the flexibility that we need to kind of deal effectively with resources that we may want to generate.
Right. Well, thank you very much. That's exactly what I wanted to get, was a picture for down the road, right? Mm-hmm. Where this is heading down the road, what commitments we might need to make or want to make. So, okay. Thank you very much. Thank you, Mr. Chair.
Thank you. Ms. Cora?
We'll move on to the defined contribution plan. Can you see it on the screen?
Yes.
Okay, good. Andy?
Yes, good morning. Andrew Wright, Principal Senior Auditor. Our review was based on the independent external auditor's financial report and supplementary information provided by George Johnson and Company for fiscal years 2021 and 2020. The auditor's report on the financial statements resulted in an issuance of an unmodified or clean opinion. The OIG's assessment, which can be found on page 3 and 4 of the financial assessment, we concluded that generally the audited financial statements and other supplementary information appear complete and thorough. However, our review of the report content noted the following. The plan's total assets as of September 30th, 2021 were $498.2 million and were mostly comprised of investments in mutual funds. Total net position restricted for pensions increased by $60.6 million or 13.8% from the prior year. Total additions to net position, excluding net appreciation, totaled $21.1 million for the year ended September 30th, 2021, compared to $21.8 million and $25.6 million for the years ended September 30th, 2020 and 2019, respectively. The fair value of investments was favorable at the end of the year. Net appreciation in the fair value of investments was 80.5 million for the year ended September 30th, 2021, compared with 29.3 million and 1.8 million for the years ended September 30th, 2020 and 2019, respectively. The net appreciation in fair value of investments is added to the plan's net position. The net appreciation in the fair value of investments for the current year is attributable to the improving financial markets and resulting investment performance of the year. Total deductions from net position decreased by approximately 20.5 million from 61.6 million for the year ended September 30th, 2020 to 41.1 million for the year ended September 30th, 2021, which is attributable to the lower participant distributions and withdrawals during the current year due to retirements, terminations, and distributions, and pursuant to the provisions of the Coronavirus Aid, Relief, and Economic Security Act, or the CARES Act, which ended in which ended in December 2020. Our conclusion is based on the work performed. Nothing came to our attention that caused us to believe that the audited financial statements of the Wayne County Employees Retirement System and other supplementary information were not presented in conformity with the generally accepted accounting principles. It is our recommendation that the OAG's financial assessment limited review report of the Wayne County Employees Retirement System defined contribution plans financial statements for the fiscal years ended September 30th, 2021 and 2020 be forwarded to the Wayne County Commission for receipt and filing. That concludes my presentation. Thank you.
Thank you. Anything further, Ms. Cora?
That concludes this presentation. We'd just like to thank the representatives from the retirement system for all of their cooperation during the engagement.
Yes, thank you. So, so if there's no further questions, can I get a, I think we do them separately. So, can we get a motion to receive and file the defined benefit plan?
I move that we receive and file the plan.
Okay, support?
Support.
Move and supported. All those in favor?
Aye.
Aye.
All those opposed? The ayes have it. Next item would be the Wickers defined estate contribution. The next one would be benefits plan. So one would be the benefits, next one contribution. Can I get a motion on that?
We have to recommend these to full board.
Yes.
Yeah, I recommend that we move.
Yeah, to recommend them. Yes.
Yeah, I recommend we move the defined contribution audit to full board.
Okay. And there's support from Commissioner
Support.
Bowman. Okay. All those in favor?
Aye.
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 All those opposed? Ayes have it. And then is that all we have, Ms. Cora? You have anything else?
Just item number 4 when we get to it.
Okay. Okay. Please proceed.
Item 4, requesting commission approval of a retroactive 3-year global license support and services agreement with Wolters Kluwer Financial Services.
Again, I am humbly coming before this committee to ask for, and I know this is a hard one for us to ask for, a retroactive approval of our 3-year global license support and service agreement with Wolters Kluwer Financial Services. This is the company that provides our teammate Audit Plus services and the hosting of our audit services. Just a little background on retroactivity. In December of 2014, we entered in an agreement with Teammate for AutoManage hosting services. It was approved by the Chairman Warrencheck, and the term of the agreement was January 1st, 2015 until terminated by the Office of Auditor General. The agreement is still active. On June 27, 2021, we amended our agreement as we upgraded our Teammate A&M services to Teammate Plus, along with adding the Teammate analytical software. That agreement was approved by Chair Bell on June 27, 2021. Each year prior to this, when the maintenance and hosting services came due, invoice was submitted and paid. But starting with the agreement from June, once the hosting and license software came due in December, we realized that we were going to be over the approval that would be approved by the chair. So it was sent to the commission for agreement was developed by commission council, but we decided to do so that we didn't have to come back every year. We have a 3-year agreement with Teammate for the hosting and licensing software. It was submitted to the commission. All the required paperwork needed to be submitted, and actually the vendor only received their FEP certificate last, I believe it was Thursday. So that's the reason for the retroactivity. We are going to have processes in place so that in the future, every 3 years, that once software comes due, we will make sure all the necessary paperwork is submitted timely so there will be no more retroactive contracts.
And as one who opposes retro, I had a lengthy conversation with the Auditor General, and software is software, and it never ceases to amaze me, but it has been worked out, and I certainly reluctantly support this. So, but if I can get a motion, I will support it.
I love this. I just love this conversation. I was just waiting to see what your comments were going to be.
A motion, so it's a motion to recommend by Commissioner Coleman?
Yes, absolutely.
And support that motion.
And Commissioner Colleen supports it. And I, okay, then I'll have a roll call vote. All those in favor?
Aye.
And I reluctantly support it also. And anyway, all those opposed? The ayes have it.
If I could just add too, we have been working on this since December.
I know. But anyway, so that seems to wrap up what we got for this meeting. So motion to is there another item?
That's it.
Okay. Yeah.
Oh, I guess
go ahead.
I do have another matter to add. Our next committee, last week, our office went through our peer review. Every 3 years, we have a peer review where an outside audit organization comes in and reviews our processes to make sure we're in compliance with the standards. We did receive a successful peer review, and we will be submitting it before the committee at the next committee on audit.
Okay, and thank you and your staff for your hard work. Next item, Madam Clerk.
Other comments?
There are none. Is there a motion to adjourn?
So moved.
Been moved and supported. All those in favor?
Aye.
Aye. All those opposed? Ayes have it. We are adjourned. Thank you.
Thank you, Mr. Chair.
Take care.